Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. John Polomny of Actionable Intelligence Alert joins us to talk about commodities, energy, and the political global hegemon. John emphasizes buying undervaluation and selling overvaluation. In other words, buying cheap stocks and selling expensive ones, which is the objective of everyone watching this show. Today, we're going to ask the questions you submitted and pick his brain on exactly that. John, thank you for coming back on the show.
Thanks for having me, Steve. I appreciate it.
Yeah, thank you. Let's start out like we always do. And what is your current assessment of the global economy and financial markets today?
Well, that's pretty broad. I think that what I had said earlier, late last year and earlier this year, or as I was forecasting that we were going to have a period of volatility, not only in the markets, but geopolitically, socially, economically. And I think that's what we're seeing. And we can get into however you want to go down into those various tangents. But I think that's being reflected in the markets. I think that, again, the U.S. market is overvalued. I've said that for a while. I'm not the only one saying that. But that doesn't mean anything because things that are overvalued can get substantially more overvalued. So that's not really helpful or actionable for anyone. But again, I don't fish in ponds where everybody else is fishing. I look for places that aren't being fished. And I think there's opportunity. Obviously, I think that people are sleeping on China. I think people have a negative perception of China. I think the economy there is slowly but surely turning. If you get all your news from Western sources, they understand that they have, you should know by now, anybody listening to this, you should really be broadening your scope of your news sources or information. Because if you're listening to CNN or, somebody like Kyle Bass, who's been bashing China for 20 years, I would suggest to you that, you're probably missing out. It's actually outperforming the S&P, the Chinese stocks right now. But that's another tangent we could possibly go down. But there's places around the world that are doing well, and I think have opportunity. I think the U.S. It's kind of a wait and see thing. We don't really know what's going to happen with all this turmoil going on with the new administration. I have a wait and see, show me attitude towards a lot of things they're doing. Europe is obviously in a really bad spot. I think it's recessionary. You look at the PMIs of some of the larger economies like Germany and France, it's horrible. So we could talk about that too. But overall, I think that there's always an opportunity somewhere. And I think that you have to be willing to look outside your comfort zone and past home country bias for opportunities. There's a tremendous amount of political change that is going to happen, I think, social and political change. And some of these things could result in revaluations. I mean, you could see, we've already seen that like in Argentina, other countries in South America. Canada's going to have an election. Germany's having an election this Sunday. And the results of those, if you get changes in governments that are perceived to be less statist or more market friendly, could yield some results. As a matter of fact, if you look at talked about this in my last video last week on YouTube, the Euro Stocks 50 basically is breaking out to the upside. And people say, well, you just said the economy is horrible, but yeah, but you have to look out, a year, 18 months, what's going to happen. So what are they telling you? I've had a great run in European banks. Why would you buy European banks? I think I've talked about that before. So there's always something happening. There's always bull markets. You see what's happening with this current situation in Ukraine. It's very dynamic. Things are changing rapidly from the previous, just in a space of 3 to 4 weeks, the whole situation has changed. That opens opportunities. So that's kind of how I look at it. You have to look at everything, I think, distill it down, country by country, region by region, and try to find a narrative or story. But like I said, there's plenty of undervalued situations, and I don't really want to play in overvalued situations, which I think the U.S. is.
Okay, so generally speaking, you see the U.S. and the U.S. stock market as overvalued, and where you see some opportunities right now are in emerging markets, especially China. There's always an opportunity somewhere. It's simply a wealth transfer. money moves from one spot to another, and when it's overpriced, you get out of there and sell, and you move into where it's cheap.
Basically, I mean, I don't have this in my newsletter, but I have kind of been enjoying this basket of Japanese nets that I've kind of collected. And as the Japanese Ministry of Finance and the government there encourages in the Tokyo Stock Exchange changing the rules to kind of motivate these companies to not sit on all this cash, and you've seen a lot of dividend hikes and share buybacks and things that we saw here in the West decades ago is starting to happen there. So been it's kind of been a very interesting, that's an opportunity too. But again, it's how much bandwidth you have. You can't kiss all the girls. So there's a lot of stuff happening, and you have to kind of figure like how much bandwidth you have to really do some of these things. I mean, does anybody really have the time to go through the Japanese company handbook that's 6 inches thick, and try to find, I mean, so anyway, it just depends, like I said, what you're interested in doing, how much bandwidth you have, how much research you can do.
Okay, talking about VIP has a question on the US dollar. He says, do you think the US dollar is going to get weaker or stronger going forward? I'm assuming he means the DXY because you got to compare it to something. What do you
Well, if
think?
you're comparing it to the DXY, the majority of the DXY is the euro, and Europe is the euro is in a you have a you have a situation where they've been cutting rates there, so you have rate differentials that affect that. We look like we might be slowing down our rate cuts or stopping them, pausing them. They're going to continue to cut rates, so that's causes the euro to be weak. The economies there are horrible. That's going to continue to cause and they're just you have political dwarfs there. It's an uncompetitive place in Western Europe, not necessarily Eastern Europe. You could very easily, I've said this for a while, and I do have a tendency to make provocative statements, but I see a path to the Eurozone not existing in 10 or 15, 20 years, maybe even sooner. I don't know how they're going to survive what's getting ready to happen. I mean, they really, we have a whole, as President or Vice President Vance said to the Munich Security Conference, there's a new sheriff in town. No one cares about Western Europe. They're pygmies. They've allowed themselves to atrophy, become uncompetitive, become sclerotic. That's not positive for their currency. So if you compare it, if you're looking at the Dixie, the problem is when I look at the dollar, you get a lot of play on the internet and on YouTube and in Substack if you make very provocative statements about the dollar and the economy. But you have to look at the track record of these people. Yes, all fiat currencies eventually go to zero. It's not helpful to say that, though, like certain commentators do, if you can't put a timeline on it. I mean, how long did it take the Romans to completely destroy their currency? Well, several centuries. The dollar's not going away. The dollar, this administration wants a weaker dollar because they want to bring manufacturing back to the US. They want to make us more competitive. The problem is everybody else has the same plan. And if that's why if you look at gold in various currencies, and Ronnie Stoiffel's shop does a good job on this on their monthly gold compass, you will see that gold is up double digits in most major currencies and most emerging market currencies. And that's because of the continued devaluation of fiat around the world. So when someone says, well, yes, the administration wants a lower dollar, they want lower interest rates, but how do they get there? And then this is all going to be competitive devaluations because everybody wants the same thing. So I think that there's a lot of ruin in a country, as Adam Smith said. So people predicting the end of the United States, um, eventually, I think the United States will not exist as a political entity. But again, it's not tradable. That's a philosophical coffee house crap discussion because it's not really actionable. Again, there's a lot of ruin in the country and a lot of inertia. So um, I don't think that one administration can change everything. As a matter of fact, I think there's a lot more smoke and mirrors going on here than actual real stuff that's really happening. And you have entrenched interests in the U.S. that as soon as this person goes away, they'll slither out of their holes and we'll go back to the way it was before. But that's another thing we can talk about. But no, I don't see the dollar going away. The administration wants a weaker dollar because they think that makes the U.S. more competitive in manufacturing, and they're trying to reshore. we'll see if they're able to do that. They have some smart people working there. I've seen some things where people say, well, they're just going to revalue gold. Yeah, that's a way to do it. Luke Groman's talked about that, but I mean, are they really going to do that? I mean, if they do, okay, but we'll see. I just try to stay like within the parameters of what I think is kind of realistic, not necessarily, outliers. And I think some of these things are more outliers and they're not really tradable.
Okay, so you can see the DXY, which is fiat currency compared to other fiat currencies, most of that being the euro. You could see that actually probably getting stronger just because Europe isn't looking so hot, or they're looking worse than we are. But as far as the dollar itself in relation to what it'll buy, an ounce of gold or a barrel of oil, you could see it getting weaker in relation to that.
Yeah, it's going to continue to get weaker just because of, I mean, I'm reserving judgment on this whole Doge thing, but again, we're still running 1.5, $1 to $2 trillion a year deficits. And there's arguments about how much they've really cut. How much have they really cut? I've seen different. So, that continues regardless. So we'll see. We'll see what happens. But you know, the fiat currency, I mean, it's like I said, I mean, gold is a currency. You have to look at it that way. And so you see that it can't be inflated, or Bitcoin, if you want to look at it that way. You see these things just like you stated, the things that can't be inflated away, that they can't create at a central bank out of just their whims. They're appreciating vis-a-vis these paper currencies. Yeah, that's how I see it.
Okay. Mike wants to know, he says, where are the most depressed assets and sectors currently?
Most depressed. Well, things aren't really as cheap as they used to be in a lot of places. I think that there's opportunity in some select companies that I have in the portfolio. I have a company that I think, taking a look at the possibilities of, as this thing gets resolved in Ukraine, there's some cheap things available there. I'll just throw the names out because I'm looking at them and they're not in the portfolio. But you have an iron ore company that's in Ukraine. It's called Ferro Expo. It trades in London. It's based in Switzerland. It's been producing iron ore. It's a very, very long-lived mine. It's very well run. It's been producing through the war. They're having to pay higher costs for electricity because of the war, because of the infrastructure degradation that's happened by the Russians. But if this thing gets wrapped up, then that gets fixed, and their cost of power goes down. So it's pretty cheap. You have some of the agricultural stocks that are trading in Poland that are in Ukraine. They've already moved. You have this bank in Austria that seems a little bit interesting. That I think it's called Raffenstein or something bank. Anyways, it's pretty cheap, and it has a pretty big book in Russia that it never divested. And that business has done very well. And if you get to a situation where we're talking about now of lifting sanctions on Russia and everything goes, and we're all friends again, and everything goes back, and they're back in SWIFT, then some of these things have the potential to move quite a bit. There's a fund. It's called the J.P. Morgan, I believe, Middle East fund or something. It trades in London. It used to be a Russian Eastern European fund, but after the confiscations, they never sold their assets in the Russian stocks. They still hold them at the books, but they hold them at like almost at zero. You can look at their fund holdings. I don't know the exact symbol, but it trades in London. It's like the J.P. Morgan Middle Eastern whatever fund, and they've shifted the assets to that. But if you look at the stocks that they're holding, the Russian stocks that they're still holding, and their valuations, which they haven't marked down, you can get the quotes off the. Basically, you have something that's trading at about 280, 300 pence. That's probably worth 600 or 700 pence. And so, if this opens back up, then you can get it. Of course, these things are already moving because if you wait until it actually happens, it's going to be priced in. You have to look forward on these things. So as Stan Druckenmiller has taught us, you have to look at not the way things are now, but the way they'll be in a year or 18 months. That's a lot of speculation. I think you can speculate in certain names in the North Sea oil and gas because I think that the UK is going to be forced, and the Netherlands, some other folks, to loosen up they're going to have to reverse some of their ideology around net zero because the cost of energy is just exploding. And so there's opportunities there. There and there's an opportunity, since USAID went around, they can't go around and fund color revolutions anymore, which they were trying to do in the Republic of Georgia. There's an entity that trades on the London Exchange um, that invests. Basically, it's kind of a Berkshire Hathaway type of the Republic of Georgia that trades about 50% of net asset value. They're buying back shares. The company's well run. They have various business interests. They hold a big share of about 20% of the Bank of Georgia, which is a very well-run bank that's expanding into Armenia. And you can buy this thing at 50 cents on the dollar. And now that we're not having color revolutions, the stock is starting to respond again. So um, there was chances to buy that stock, like when the Russians first invaded Ukraine, it got clobbered. But then what happened? A bunch of Ukrainians and Russians went to Georgia to avoid the war, took their money with them. I mean, this is the kind of things that I look for. These things are available. You can look all across the UK stock exchange. What you should do if you have time, people should do is do what Buffett used to go through every share listed on the AIM and the LSE and look for cheap. There's tremendously cheap stocks. And I think that, this political change is going to happen. Reform is now at about 25%. If you had elections today, this back and forth ping pong between Labor and the Tories achieve nothing. That people are frustrated, and things are just going to get worse there. So I think there's some opportunity there. Some companies, and a lot of these companies trade there, but their operations are in other places around the world. So that's an opportunity. Like I said, there's opportunity. Obviously, I'm still bullish on some countries in South America. Argentina, has moved quite a bit, but I still think there's opportunity there. Colombia is getting ready to have an election. Chile, Brazil, I think these places are very cheap and have opportunity. And some of the stocks in Colombia are already moving, anticipating. So the fact that Mr. Petro won't be the president after the elections next year. So you got to get ahead of these things because, like I said, you're competing against a lot of smart people, and if you wait for confirmation, then it will already be priced in. So I think you have to kind of get ahead of this stuff. But there's opportunity all over the place. The cheapest things, I mean, I wouldn't say there's an industry that's super cheap that you just buy the whole thing, but there's individual. I mean, go through the whole Hong Kong. If you want to know what's really cheap around the world, but no one will buy this, are Chinese insurance companies. I
Hmm.
mean, look at their current ratios, look at how cheap they are, look at their dividends. No one on here will buy them. I buy them, but they're extreme. That's probably some of the cheapest stocks in the world right now.
Okay, okay. Chinese insurance companies. I did not expect that. Okay, and got an iron ore one, agricultural. I like what you're talking about the arbitrage there. I got caught up in the Russia thing. I didn't think they were going to get sanctioned, and I thought Gazprom was pretty cheap, and I found out it could get cheaper. It can go to you cannot own it anymore. The Russian ETF, I thought that was a no-brainer play. Nope, that's gone. But you see, I mean, it's possible that those could get lifted and we might actually own those again.
Yeah, depending on how your custodian handled them, some of the custodians liquidated. I think I don't know every single entity what they did. Some people just sold them off and then you got pennies on the dollar, but some of them held, like that JP Morgan fund and some other custodians, and they're marked down, but they still have value and you can find out. I mean, they trade every day, and a lot of these companies have continued to do well. I mean, let's be frank here. Here's what's happening. Let's kind of expand this a little bit. The post World War II liberal world order that we have in the West believe, well, they have this view that they have to protect democracy and the values that they think that are important, which I don't agree with, but their values that they are going to support, and no matter what, we have to support those values anywhere in the world. And we used to have that's how they run things, and that's basically fantastic. That's fantasy. You used to have politicians in the world, and you do in China and Russia, and now Mr. Trump and his administration, which is a totally different administration than the first one. They're engaging in real politic. Okay, what is real politic? People need to come up with that term because people are shocked. What do you mean we're abandoning these people? Blah, blah. No, we're doing real politic. What is Trump trying to do? He's trying to get energy prices down. If they open up Russia and Russia can start trading again, what do you think is going to happen to? I mean, $10 could come off Brent like that.
Yeah.
He's talking about the Russians are even talking about, and they're talking about letting BP and Exxon still have assets in Russia. You see what I'm saying? This is real politic. As I said in a video, one of my favorite statesmen of all time, and I don't agree with everything he says, but there was a man named Rabbi Meir Kahane. He served at the Knesset, and he said many times when he would be interviewed, he was a real radical guy, an ultra Zionist. I didn't agree with him on that, but here's what I did agree and respected him on. He made a profound statement. Countries have interests, not allies. This ridiculous fantasy that they live in the post World War II Western European hegemonic fantasy world about democracy and our values, that's all bullshit. Okay, look who you're dealing with now, the three major powers in the world: Xi, Putin, the United, and Donald Trump. These people all engage in real politics. What are our interests? How can we advance our interests? Some, and if our interests align with another country, then we will cooperate with them. If they don't, then we won't. There's no such thing as allies, and these people are living in a fantasy land over there. Okay, and that's why they're going to continue to be poor until the people in Europe decide to completely throw these people out. I encourage people watch watch two speeches. Spend 40 minutes doing this. Watch Pete Hegseth's speech that he gave when he recently went to Europe before the Munich Security Council started. He basically said, we're out. We're not spending any more money on these foreign wars. We're done with that. And then watch Vice President Vance's speech and look at the reaction of people, of the Europeans sitting there. Okay. He used the term, there's a new sheriff in town. Okay. And we're not doing this anymore. And, it doesn't matter what people, well, that's not right. Think, what is right and moral? What's that got to do with anything? That's not how real politic works. And people need to familiar themselves with what is real politic and what does it mean? Because it's going to happen. And so our job as investors is, it doesn't matter if I agree if this country's evil or this leaders, they're all sociopaths. That's how you get to those levels, all of them, including Mr. Trump and the guy before him. They're sociopathic personalities. Okay. What's that got to do with anything? Our job is to make money. Our job is to trade. Our job is to deploy capital and get a return on it. And so if you want to do that, you can be moral. And, I don't invest in tobacco companies because I don't, I don't like how 400,000 people, I don't want to profit from that. That's a moral judgment I've decided to make. But they've been best investment since 1900 of all stocks. Okay. I just don't want to stand in front of the dread judgment seat and say, what, profited off 400,000 deaths a year. That's me. So I get it. Okay. But, this is a sliding scale morality, right? So some people, this is, you just got to look at way things are. And then if you're willing to, I'm not going to go along with, okay, well then stay poor. I mean, pipeline gas is probably going to get turned back on from, Zelensky won't be there. He's a dead man walking. There's going to be a government there. We know what's going to happen. And so that's why these stocks are already moving, because the market and people that actually pay attention are buying these assets now because you see what's going to happen. Is it going to happen next week or in a month? Probably going to take a while. You negotiate everything, but it's going to end up happening because they need those resources in the market. That's how you get lower energy prices. It's a whole, what is Mr. Trump trying to do? What is Mr. Putin trying to do? And then you see how this is all aligning. We have bigger fish to fry with the Russians and Chinese, the Arctic. Okay. Oh, that's going to get dealt with. The whole, overall arms control and all these other things that are bigger than several oblasts in Eastern Ukraine. So, we're moving on. And that's going to, like I said, that's going to be chaotic. For some people, it's going to create volatility, but it's also going to create opportunity. That's just one example. Just like these elections that are going to happen in South America, or what's going to, I think, is going to be an upheaval in Europe, because Europe's getting more. Watch the vice president. He called them out. You say that you told us what you're against. You're against, this new, I don't want to use the word, but comparisons of Mr. Putin, like he's some guy that completely makes every decision in the Russian Federation. Like there's not an entire government there. This cartoonish view. And then, so we're not going to deal with these people. Okay, well, it's like the little villages, Baltic villages, I call them, of Estonia, Latvia, and Lithuania, removed themselves from the grid with Belarus and Russia, and power prices went up 3 times. Well, if you want to pay more 3 times for electricity, then you can do that. That's your choice. There's consequences. That will the people keep electing you though, as their standard of living goes down? Likely not. That's why you're seeing AfD, Front National, all these basically right-wing parties nationalistic parties come to power, because people can see what's happening. The immigration thing, it was amazing to me. I mean, I'm pretty radical and stuff. I don't really care anymore. I mean, I don't want your channel to get banned or anything. But the day before the vice president gave the speech, he brought it up. Another Afghani unmarried young male asylum seeker drove a car through a crowd in Munich. Sudden jihad syndrome. People have had enough of this. You have women crying all over TikTok and stuff in Europe. They can't walk down the street. Okay. They're constantly, I mean, this is going to boil over at some point. And, again, it'll cause, I think we're in for a time of tremendous upheaval economically, socially, geopolitically. And again, that's just going to create opportunity. And so, I mean, I was a little long-winded. I kind of went off track, but that's, people need to pay attention. Just everything has changed in the last 3 weeks, 180 degrees. So I would be paying attention to these things, because they're going to happen whether I like it or you like it or anybody watching this likes it. It's called real politic. It's how things are. Rational ways of looking at things, pragmatic ways of looking at it. How can we advance the interests of my particular country? And where things align, we'll work with other countries. Where they don't, we won't. But we're not going to wed ourselves and hold hands and jump off a cliff together like they do in Western Europe. And then on the way down to the rocks below, where we're going to all die, well, at least we were moral and good people. What's that got to do with anything in the history of the world and geopolitical relations?
Yeah, I haven't watched the Pete Hesketh speech, but I did watch JD Vance about 3 times, and it was probably the best speech I have ever seen. He's probably going to be our next president, and we need to start front running that. But one of the things I really like, he talked about the elections that are basically being nullified in Europe because the person that the politicians didn't want won, so they're having their courts essentially nullified. One of the things that I loved about his speech was he said that our problems are of our own making. And I quote, he said, "If you're running in fear of your own voters, there is nothing America can do for you, nor for that matter, there is nothing you can do for the American people." This was, I mean, I was laughing. No one in the audience was laughing. There was some, it sounded like his Secret Service agent was trying to get an applause going, but it was just a golf clap that just died on deaf ears. Everyone in the audience looked terrified. He essentially called him out and said that you're not delivering on what your people are voting for, and you call yourself a democracy. It was an amazing speech.
Yeah, it was tremendous. So basically, that means you start have to look at things as like, well, how does the EU stand? What does the EU stand for? Okay. And, when the defeat happens, I mean, this is ridiculous. You can't have it both ways. I find it humorous. It's amusing to me. You can't say that Russia's going to collapse and we just need the army sucks and they take chips out of washing machines. And then on the other side, you say that we have to continue funding this nonsense and all this killing and dying because they're going to take over Europe. Well, which is it? If they're really going to take over Europe, and you believe that as the leadership of the EU, then why aren't you on a wartime footing? Why aren't you having mass conscription and putting a 2 million man European army together and get ready to go to war? Well, they're not going to do that because the people in Europe don't want to do that. And no one actually believes that. The goal is to keep the US in Europe. Look at he who pays the piper calls the tune. We spend the NATO budget, however you want to, we're 70% of it. That's over with. So they don't know what to do now. The free ride is over. The nonsense is over. The original guy that was in charge of NATO that helped start it called for three things it was there for: to keep the United States in Europe, to keep Russia out of Europe, and to keep Germany down. Well, we're out. So the best thing that could happen is that Germany and Russia reconcile. I've said this many times. That's just a natural fit. Okay, this manufacturing and well, it used to be manufacturing and engineering prowess of the Germans, coupled with the infinite resources of the Russian Federation, with all of these southern and eastern markets ready to accept all. You see what I'm saying? That's their natural allies. But we've done these bureaucrats and these politicians and these and the Atlanticists that trying to hold on to their hegemon. They didn't want to see that. So that's why I'm saying things are chaotic, and we don't know how. I don't know how they'll settle, but I think it's worth watching because it's going to create opportunity.
Yeah, yeah, I do as well. Okay, let's move on to, well, while we're on the political talk, Stephen has a question. He says, how is the mass deportation effort affected businesses, and going forward, do you still equate it as positive for the economy?
Well, it's going to raise prices. I mean, but it will also raise wages for low wage workers, because what you've done is basically inundated the country with the peasant class of the rest of the world. It's not, they use this term since I was a kid, Steve. I'm 57 years old, and it's always been 11 million. No, 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 no. It's 50, 60, or 70 million now. Okay. And so if you think you're going to deport all those people, no. But I will tell you what's happening here in South Texas, which right on the border. They got a car wash over here called La Brisa's Car Wash. It's empty. There's no workers there because they were all illegals. Some restaurants here have been raided. Okay, they're not playing around. And so you're seeing self-deportation. So what will happen is that look at the constituency of Mr. Trump: working class, lower middle class, middle class. Okay, not the wealthy, not the business owners, not the U.S. Chamber of Commerce that has sold out the United States average person. And so wages could go up. So I think what Trump and Bessonette and these guys are doing is they're running a experiment. And yes, you reduce and get rid of these, basically this peasant class that was working under the table and for cheap wages. If people want to keep their business going, they're going to have to pay higher wages. Those costs will be passed on, so that will be inflationary. We're not going back to 2%. We're probably going to be running this economy at 3.5%, 4%, 4.5%. But the gamble that they have is that they can run the economy hot, and you could still have, people real wage growth that we haven't had 30 or 40 years for the constituency of the people that support this populist vision of Mr. Trump's and his cohort that's in power. I think that's the gamble. So yes, it goes without saying that if you lower the labor, if you lower labor supply, labor cost is going to go up. So you're going to have to pay more. It's not like when I see a roof get done around here, and an 1978 Econoline van pulled up, and 8 guys come stumbling out. You can see that they're from somewhere in like Chiapas province. Tejano music starts, and they get to work. I mean, you're going to have to pay for like guys that are from here, and they're going to expect a decent wage to go up on a roof and work in hot sun. So that's going to cause costs to go up. So do I think inevitably, I think it could be a net positive? Look, I have deeper and more immigration was my major issue that I care about the most, meets the most, because you cannot bring I've lived all over the world. You cannot bring the entire, look, every peasant and every uneducated worker around the world wants to come to the US. So I ask the question of everyone. I'm not going to argue. First of all, I'll ask people, how many people are in the US right now? It's not like this is 1806 and we're trying to settle the West. Okay. We have 350 million, 60 million people. How many people should be in the US, number one? Why, when you look at the immigration into other countries, they always, I'm not against immigration. People say, well, who's going to pick the lettuce? I mean, these brilliant wine-soaked, Xanax-fueled liberal white women. Well, who's going to pick your lettuce? Well, I grew up in South Florida in the 70s when they used to cut sugar cane by hand. They had guest worker programs. Jamaicans and Haitians would fly in, men, for the cutting season, and then they would fly back to Jamaica and Haiti. They didn't stay here. They didn't bring their families here. Okay. So guest worker programs, they used to do it in California that way too, until they, opened the floodgates, and then you just go down to Home Depot now and get 20 guys, or you used to be able to. So there's ways to solve these problems where you can have mutual beneficial outcomes. But we cannot, there's more to a country, in my view, this is getting off the tangent, than just money and just how do I benefit? And did my 401k go up? I've changed my view when I built all these renewable things. And I went to all these small towns that used to have manufacturing throughout the Rust Belt. And I saw the deprivations. I saw young men drugged out, drunk. You go to Illinois in these small farming towns or small manufacturing towns where it all drew up. U.S. Chamber of Commerce, both parties sent all that manufacturing overseas. Okay. And it decimated an entire cohort of the population because there's no jobs, there's no hope, there's no nothing. And then, you have some smarmy um, uh, uh, East Coast or West Coast person that benefits from this. Well, learn the code. That's what the answer is. Or growing up in or living in West Virginia and seeing the mining industry get decimated. Well, learn the code. Really? Learn the code? So, yes, prices will go up. But I think that if they reshore, like they're talking, there's a lot of plates in the air, and I'm not sure they can pull it off, but we'll see. But I think that overall, at least from my perspective, I think it's going to be a net benefit. We cannot just have the entire world's peasant class come here. It'd be a couple few billion people that would like to come here. Why wouldn't they? Well, would the United States still be the United States if that happened? Probably not. Country is a reflection of the people that live in the country. I'll just say something. I was in Guatemala building the plant one time. We were driving home, we drinking some beers in the van with me and my guys, and they were like, "Why is this place screwed up?" I said, "Because it's full of Guatemalans. That's why." And it's not racist. Doesn't mean they're bad people. I met they're wonderful people. They always have a smile on their face. They work hard. They don't have a space program. It's unorganized. It has the vestiges of Spanish colonialism still there. The patron peon system. This is not do you want to import this into the United States? And then these people create their enclave. Nobody assimilates. No one, no, it's not true, Steve, that everybody in the world can be whoever they want to be. I'll stop there. There was a man that wrote a book in the late 80s called Bell Curve. He was castigated. People should read it. You'll understand what I'm talking about. But you can't talk like that because then you're called different names, and people, the worst thing you can be, it can happen to you in the United States or the West is to be called a certain name that begins with an R.
Yes. Okay, so basically, big picture, you see that prices are going to naturally go up because, we're going to have to employ local residents here that, or native residents, I guess, to pay them more wages. But in the big picture, the grand scheme of things, this will be better for the country as a whole.
They can get energy prices down like they want and get rates down. They're going to run it hot. So if you run it at 4% inflation, but the nominal economy is growing at 6 or 7%, then wages are going to go up for people, and the constituency that voted for Donald Trump will benefit.
And that'll be a win. Okay.
Yeah.
All right. Let's move on to, let's do Marcus's question. He says, if you had to rank gold miners, silver miners, oil companies, and uranium miners, so gold, silver, oil, and uranium, according to the time frame and upside you expect, which order would you put them in?
Well, I think gold is probably overbought right now. Everybody's talking about it. I think I would think that out of those four, I have a view that I think oil prices are going to move higher, have a possibility of moving higher later on this year. But they're all, you know, eventually silver will outperform gold as we get further into this bull market, in my view. Once silver gets going, it usually outperforms. But it's difficult to put time frames on things. Okay, they all have, nobody likes uranium anymore. The fundamentals continue to get better and better, but everybody hates it because it's not doing what they want it to do in the time frame they want it to happen. So, um, difficult to say. I say out of those four, that if you pin me down, I'd probably say I'm probably most bullish on oil. But that could change, if they release the sanctions. But look at even what OPEC's doing. I mean, they're even talking about, you know, uh, I have this view that I don't think that there's one view, there's two views on oil right now, or not two views, but what I'm I'm a believer that the underinvestment is going to catch up with the industry. Um, and I think that the narrative is shifted towards cash flow. Now, there's another narrative that, hey, price goes up, these guys are going to start drill, baby, drill. But that's kind of like the 2016, 15 way of looking at things. There's been a lot of consolidation in the Permian. And if you listen to the conference calls, no one's interested in really just drill, baby, drill. The incentives have changed. Cash flow and return to shareholders has become the narrative. So, and OPEC, everybody says, well, if the price goes up, OPEC has all this spare capacity, but do they? I mean, how much spare capacity does Saudi Arabia really have? People say, well, they can run at 12, 13 million barrels. Well, they've never done that for extended periods of time. They've done it for short periods. So this idea, I don't know. I just have this view that the underinvestment is going to catch up with the industry and I keep looking at demand going up. The IEA has been wrong about that, peak demand. I just pointed out recently that, for the last 4 years since COVID, I mean, you've had air travels increasing at double digits every year. It's just, you know, um, compound growth rate as people get wealthier. And, you know, it looks like the electric car fad, mind virus has kind of died on the vine. And so a lot of the manufacturers are shifting back to internal combustion engines or hybrids. So again, energy inputs into an economy have to increase uh, in order for wealth to increase. And so I would say oil out of those four probably for the rest of the year. Um, but I think gold and silver have the potential, though. I think there could be a potential for them to have a breather because they've been really hot. I mean, gold's up tremendously, and everybody's talking about it, and everybody's waiting on silver. I do think one metal that wasn't mentioned is platinum, which I think is probably the most undervalued metal. Um, and it looks like it might be breaking out of a 17-year, 18-year downtrend. So yeah, I mean, I hate to. I am bullish on all of those things, but I would probably say that I'm more bullish in the near term with oil than probably gold, silver, and then uranium. Um, but that can change in a couple weeks. Anything can happen. So, I mean, what's going to happen the next time Cameco or Kazatomprom reports, and what's the acid situation? I mean, is it getting anything can happen, right? So, yeah, I that's about how I would rank it right now.
Okay. So your highest conviction one is oil, and then you just see a massive underinvestment. I think Rick Rule told me it's something like $1 billion a day in exploration and development is how much they're under investing. So you see that catching up. You question how much OPEC can actually increase their capacity for an extended duration. We've seen them increase 10 or 15 million barrels a day, but that's just for short time durations, not something that could be sustained. Air travel's increasing. The EV narrative is not playing out like everyone thought. And one that wasn't mentioned was platinum. And I'm pretty vested in this. I think I now have about 2% of my net worth in platinum. So I'm betting on that as well. We'll see if that is dumb or not. But your number one is oil.
Well, I wouldn't just say oil, I say oil and gas, overall that oil and gas industry. I just see I don't necessarily agree with some other folks that there's just this cornucopia. Look, a lot of this stuff exists in large quantities, but you have to spend a lot of money and time getting it out of the earth. That's the trick. There's plenty of uranium in the Earth's crust. It's not a shortage of uranium. But no one's who's building a new mine. That's the question. Who can build it? Who has the ability to do that? Who has the capital to do it? So I'm just one of the things I am amazed at is like even like gold. Look at the earnings that are coming out with some of these majors. I mean, I've been following. I highlighted even last week. I mean, Barrick's a kind of a basket case, but even their cash flow and earnings were because that's what if you can't do well at $2,800, $2,900 gold, you should like close up shop or resign and let somebody else take over. And so if we have the gold price hang around here and move higher, which I suspect it will over time, then as long as the costs don't explode, they've been a great beneficiary of these lower energy prices too, because what a third or 40% of the inputs into a mining operation are diesel and electricity and stuff like that for the mining operation. So they've been a beneficiary of this. So, and then you can look at things like, if you're in Canada and the Canadian dollar is devalued against the US dollar and your costs are in Canadian dollars and you're selling something for US dollars, you get a benefit. So you just got to look at this stuff individually. But the cash flows, I mean, like I said, I think we were talking before we got started. I was mentioning, I've been reading these, listening to these conference calls, and I'm just shocked at like the huge explosion in cash flow, raising dividends, talking about doing buybacks. I'm talking about these gold mining companies, and people are just sleeping on them. They don't care. And so I think that's going to change eventually, though.
Okay. You just hinted at it, so let's hit this one real quick. Zoomed Out is asking, please explain the risks of Forex spreads when investing in the junior miner space. So basically the spreads between different, currencies.
Well, you have to be cognizant of this goes into locations, right? I mean, at this point in the cycle, why do you need to be in some basket case country? Like I said, all of the majors, I mean, Canada that have operations in Canada or the United States or whatever, most of their mining operations, I mean, they haven't even really ran yet. And so why, why do I need to be involved with some one mine company in Mali in West Africa when I can buy, Alamos or Agnico Eagle or Anglo Gold or what have you that have different operations and big mines and in secure locations and they haven't even moved and you know their share prices really haven't responded as you would expect. What you should expect to see because of the leverage to the gold price, you should expect the gold stocks to go 3 to 1, right? So if gold's up 50%, you should see the GDX go up 150%. That's that's a benchmark. We haven't seen anything like that. They've really underperformed, and that's because all the oxygen's been sucked out of the room with AI and the Mag 7 and all that. So I think as that kind of rationalizes itself, that you're going to see capital move back in some of these other areas. These things are going to start screening, right, on Coifin and other thing, and Bloomberg, and people are going to be like, wait a minute, what's up with these cash flows? What's up with these? These things are undervalued. People are going to start looking at them at businesses. Now, mining is a crappy business. It's a net destroyer of capital, but there are these windows, and we are in one of them where they are tremendous businesses and you can make a lot of money. So I may be wrong. Maybe this is the first time in history where we have the underlying metals go up tremendously and nothing happens with the stocks. Anything's possible, I guess. But I just think it's a matter of time as the bloom comes off some of these other things that capital will start rotating into these. I mean, they're pretty much some of them are value stocks now. So anyway.
Okay. Darren has a question on uranium and nuclear. He says, can we get an idea of this? He's talking about megatons to megawatts. So basically, can we get an idea of the size of the impact that downsizing nuclear arsenals for fuel would mean to the supply demand?
Not even worth worrying about right now. We haven't even got the Ukrainian war resolved yet. Arms control and down blending is years down the road, if it ever happens. Could it have an effect? I guess. The market's short, depending on how you want to listen to, 30 to 40 million pounds a year, and that's going to grow over time. They're going to need everything they can get. And again, I ask people, um, if you look at the demand side of the equation, um, it's insatiable. Our children's children, they're going to be like living in a nuclear age, like Hyman Rickover thought originally. Okay, uh, because we'll have a higher value uses for hydrocarbons instead of using it for like heating your furnace or driving around in your car. And so we're going to move to nuclear, but the transition is going to take decades. And the problem is, again, there has been insufficient investment. I keep asking everyone, people are impatient, naturally. Demand keeps going up, more reactors keep getting announced, turning reactors on, the Japanese, wherever you want to look. Don't even talk about SMRs and all this stuff. But I don't see anyone announcing that they're building the new mine. And every one of these brownfield restarts has been a basket case. Whether it's Paladin, looks like they might have finally got stuff under control, but UR Energy and Encore and all these guys, and what do they all say? The same thing. We don't have the people. We don't have enough drill rigs if it's an ISR. We don't have this. We don't have that. Now, they'll fix all these problems, but it'll take time. But that's not going to do it. I mean, when's the big money in the big, super big mines going to come online? No one's even talking about at next gen when they're going to build that Arrow mine. 2030, 2028? Have they started? No. Who's going to finance it? Not them. They're going to have to bring in a partner. Who's it going to be? BHP, Cameco? I don't see how this is going to resolve. So, um, uh, if you want to say that, we did have a megatons and megawatts program, but, and this has come up in the news recently, but, they got to resolve the Ukrainian war and get the sanctions and get the overall security agreement in Europe negotiated before we start talking about arms reduction. That, by the way, was already in place that the U.S. Got out of. Uh, so this is why, people like in Russia and China think that the U.S. and the Europeans are, um, uh, they're incapable of making a deal and keeping it. This is their perspective because we don't. We break deals all the time. So, and you're going to have another election eventually, right? I mean, you're going to have an election in 2 years, and if the Democrats get into the House, Hakeem Jeffries said he's bringing impeachment the next day. So so who knows? I wouldn't worry about down blending of nuclear weapons at this point. Maybe it'll happen, but it'll be years down the road.
Okay. Okay.
I
I've
see no
noticed there's
path
a,
to it right now that's actionable.
okay. All right. This is not something we need on our radar that is all a concern.
No.
Okay. All right. What do you see as, I see a real arbitrage here, and maybe I'm insane, but I've been buying a lot of physical uranium. I basically look at these things as a place to store cash. When I look at PHYS, the Sprott Physical Gold Trust, I look at it as like a place to store cash. The Physical Copper Trust, the same thing. The Physical Uranium Trust, the same thing. It's a way for me to store dollars in something else that I think will probably do better than the dollar. And I've noticed there's a real arbitrage right now between the term price, 81 bucks for uranium, and the spot price right now is, last I checked, it was 65 or 66. But with the discount on the Sprott Physical Uranium Trust, you can pick this stuff up for like $60, $61. Are you seeing the same arbitrage? Am I crazy? What do you see here?
No, I don't think you're crazy. I think that's how you create wealth long term. The problem is that, um, I hate to say this, but people don't understand how this market works. They don't understand the industry. There's plenty of information out there. It's been explained dozens of times. Guy Keller, Justin Hune, Mike Alkin, Cuppy, um, how the term market works, how the spot market works. Okay. Um, you just need to look at SWU prices, enrichment price. These things are all how when a utility people need to do their own homework. I'm not gonna do the homework for them. How does a utility get reactor fuel for their reactor? What's the process? Okay. And then you'll understand how this works. You'll see why the term price is the only price that matters. No one's selling. There may be something in the contract for floors and ceilings around the spot price, but the term price continues to keep going up. Enrichment prices keep going up. There's a bottleneck in enrichment and these things. And so people need to look at that. They need to understand how this really works. That takes a little bit of work. What most people want is some guy on the internet said uranium was in a deficit. How come it? Oh, I hear it all the time. It's in a deficit. Why isn't it going up? Because anybody can play around with the spot market. Maybe it's not in Cameco's interest to have it go up. Maybe they want to see the utilities inventories get completely whittled down. I mean, people not like think maybe what did Kaz Adamprom say? 5 years ago, you had people, I'm not going to mention names, saying, well, Kaz, the price of uranium, if it goes up, Kaz Adamprom's just going to flood the market. Okay. Well, we know, what have they been saying for the last 3 years? Value over volume. They have and so, okay, we're seeing inventories continue to get compressed. Utilities, we know that people that go to the World Nuclear Association and talk to the fuel buyers, they're still in la la land. There's actually people out there, even though that's Steve Milby's explained it to them that we're not going to release the pounds from the Sprott Trust to bail you people out. That's not going to happen. Now it may happen. They may change the rules there. Who knows? But currently, that's not how it is. And so everybody's just hoping that I think it's going to be a musical chairs event. Eventually, somebody's going to play this game because they're not aware. You listen to the guys that go to these conferences, and they'll tell you they talk to the fuel buyers, they talk to the people. They're super smart people. But they just don't believe that there's an actual deficit. Okay, so maybe Warren Pies is right. There's 1 billion pounds floating around, and we've all got it wrong. That's a possibility too. But I'm like you. The goal for me is to beat the S&P, okay? Otherwise, I should just buy a low-cost Vanguard fund and dollar cost average into it over a 40-year working career. That's what most people should do. They don't. They think they're smart because they're a doctor or an anesthesiologist or they own their own business, and they think that transfers to investing. And so what happens is that they go off on these tangents, they watch videos, and they listen to their favorite guy, and then they don't actually they chase the shiny object. And so this didn't happen in the time frame I wanted it to happen. I don't really know anything about this market. I don't really belong doing this because I can't devote the time and effort to it to understand it. And it didn't happen the way I wanted it to happen. So therefore, this dink on the internet's a putz, and I'm mad. That's basically how this goes. And so if I can buy something at a discount, something that I think is going to be that's in deficit, okay, and I can buy it at a discount, then I know that it's just a matter of time before I was buying gold, I was buying silver was $4 or $5 an ounce. I was buying gold was $2.50 an ounce. I've been buying platinum when it was $9.50, $9.25 an ounce. You see what I'm saying? This is how you do it. And, if something's in a deficit or something, platinum, for example, I just use as an example, when the cost of production is higher than the price of the metal, shafts are going to shut down. But what does the retail investor do? He wants to know why Sibiane Stillwater isn't going up because it's high cost production. You don't have to buy something, for the majority of the time. What is platinum? 8 to 10 times more scarce than gold in the Earth's crust, and yet it trades at a 50%, 60% discount to gold when it's historically traded higher than gold. Hello. And now we have the EV thing died on the vine, and internal combustion engines aren't going away. Well, what do they use platinum for? Catalytic converters. Where's the majority of platinum in the world mine? 70% of it. Do you know?
South Africa.
Yeah, well, is that who you want to rely on in your platinum supplier? I mean, let's get real here. When they're confiscating farmland that worked out so well in Zimbabwe, they're going to do it in South Africa now. I mean, really, you got to have a time frame. That's the problem. People are not patient. I see people get antsy in the Chick-fil-A line. This is taking 6 minutes instead of 5. Where's my, food? I mean, investing, you have a thesis, you write it down, you revisit the thesis. Are the things that I thought are going to be catalysts for this to move higher, are they still in place? And if they are, I'm going to keep accumulating. That's how I do it. Now that takes time. There's opportunity cost. There's another thing you can do that I've started incorporating, like Paul Tudor Jones is. You look at all these things, but you don't actually act on them until they actually get into an uptrend. but then you miss some of the move then. But I'm not a good market timer. So what I do is look for things that are cheap, and then I have a thesis around it, and then I just keep accumulating. And it has worked out very well for me. And it's difficult because with the way they've got everything rigged up, back in the day when you actually had to call a broker and the commissions were, 50 bucks each way to buy and sell, it kind of slowed down. Now you can just get on this little devil device here and you can get action. I mean, I don't have a Robinhood account, but somebody told me, I guess when you make a trade, fireworks and balloons go up. So you get this dopamine release. I mean, this is what they've turned it into. Okay. So are people really investing or what are they really doing? And so that's really the majority of the problem. And I say this all the time, and it does aggravate some people because they recognize themselves in that. Then other people laugh because they have patience. If you have patience, which a lot of people don't have as a skill set, like why I couldn't play Major League Baseball because I couldn't hit Major League curveballs and breaking pitches. You either have it or you don't, and you can work on it. But if you're chasing shiny objects, I think you're going to be disappointed. If you can buy things at a discount that are in deficit, again, I challenge everybody. Where's the new supply coming from? Maybe Warren Pies is right, and there's 1 billion pounds of uranium sitting out there we just don't know about. But I don't see it. So yeah, I try to buy things that are cheap, and then when they move up over time, when the thesis plays out, then when they become overvalued, you move on to the next thing. Or you're constantly, yeah, I think you have to be curious too, Steve. You have to be curious. You have to be, if you're just on YouTube or Twitter trying to find an edge, you're riding somebody else's coattails, somebody you don't know, who you don't know what they're really doing, what's motivating them. Yes, you can get ideas. Yes, you can. Oh, that's an interesting. Like I mentioned these, Faro Expo. That doesn't mean people should go out and buy it. They should research it though. What could happen? Why is the price depressed? Well, it's in a war zone and they're paying high prices for energy. But if that turns around, what were they able to do cash flow wise before that? And what's that relative to the price now? And what's the percentage chance P factor in my mind, P50, P70, P80, that it can return to that? And if it does, how does the shares re-rate? Same thing like in Colombia. If you get this guy Petro out of there and you get a center government or a center right government, how's the market going to perceive that? Well, we saw what the market perceived and acted on in Argentina when that happened. I mean, for heaven's sakes, the ETF itself is up 170%. Some of the individual stocks are up more. So that's how you have to do this. And, people just don't want to do the work, and there's no way to get rich quick. I mean, if you walk down the street and find a scratch off ticket in the gutter and scratch it off and win 5 grand, you got lucky. That doesn't mean you're a good investor. And that's, I think, what people don't understand, the difference between speculating and investing. And some of these things that we're talking about are more speculative, and some are investments, and you have to know the difference and you have to do the work. And anyways, I've kind of rambled on, so I'll stop. But that's kind of my view on this.
Okay, I feel a lot
It's
better.
worked out for me. I mean, I'm financially independent. It works. It's not fun though. You're not going to get a dopamine release. It's boring. It can be very boring. And we have
Yeah.
this desire that we want to do something. I want to do something. That kills people.
Okay. Yeah, this is what I was doing a couple of years ago with uranium when, there was these massive discounts, and I don't think I've seen one as big as it is now. When you factor in the term and the spot, and then the discount that you get on spot. But it worked last time. I was just wondering if there's something fundamental in the thesis that has changed. Like maybe I'm compounding the error by buying more the more it goes down. But it sounds like we're on the same page.
Well, I mean, look at like Paladin and Boss Energy. They have 20% short interest on those stocks right now. Okay. 20% of the float is, now Paladin, uh, I was commenting on it and said that, they were having problems at the Langer Heinrich mine. Well, now they've resolved so it has to be judged on that. You see what I'm saying? And so, Boss Energy the same way. They're having some decent success. So they're heavily shorted. And you have to take that into consideration. Stocks are not the same as actually holding the actual physical. That's a different scenario. And when something gets so cheap, sometimes there's such a discount, then you're almost better off just buying the actual commodity if you're able to do it.
Yeah. Yeah. Kind of like the moment we got right now with platinum.
Exactly.
Okay. Awesome. Well, thank you very much, John. Always a pleasure. If viewers want to get a hold of you and follow your work, how can they do so?
Well, I have the weekly video on YouTube, and then I'm on Substack, Actionable Intelligence Alert. They can find me. That's basically, I moved that whole thing over to Substack, which has worked out awesomely. So that's where people can go.
Okay. We'll put links down below. Thanks again for coming on the show, John.
Sure, no problem. Thank you.
And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.